Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame where we're looking for a 5-wave impulsive structure to the upside, and after wave 5 is in, we're then looking for a bigger move towards the downside. Now the most common target area for a wave 5 is between the 1.236 and the 1.618 pulled from the high of 3 to the low of this wave 4, giving you a target area between 38.7k and 40k. The minimum target was 38.2k, which has been hit once and now twice over here, and the maximum target would be the 0.618 sitting at 43.7k. Now there's two scenarios that you see on the chart. We have the pink line and we have the yellow line, where the pink line at the moment would be the most bullish scenario, where this is the low of your wave 4, this is your wave 1, your wave 2, continuation in a 3, 4, 5 for much higher prices to come, or we're still looking for a move to the downside and then a flat structure, an ABC, and then a continuation to the upside, where then the low of your 4 is over here. Now if we zoom in to these two scenarios, the pink line and the yellow line, then I like to start with the pink one, which is then the most bullish scenario, where this is your wave 4 in a triangle ending over here. And this is your wave 1, followed by a WXY correction in a wave 2 that I'll show in a second. And then we're looking for continuation to the upside in a wave 3, where you want to see price moving up parabolic, and you also want to see volume joining as price moves towards the upside. The most common target for a wave 2 is between the 0.5 Fibonacci and the 786 Fibonacci, taken from the low to the high of wave 1, which is respected as over here price retraced to the golden pocket, common target for a wave 2, and started to move towards the upside impulsively. Now in the more bearish scenario, but eventually bullish as well, we are looking for a bigger 3-wave structure. Now there's two options for this wave Y over here, the more bullish and bearish option. So here we're looking for a bigger WXY. After wave Y, you then look for a move to the upside. So the end of your wave 4 is going to be here, which is the yellow line showed on the medium time frame. Now in this scenario, in wave Y, we can look for a zigzag, flat, or a triangle, because wave W was a flat, and if W is a flat, then the options for Y are zigzag, flat, or triangle. But in this scenario, we would be looking for either a zigzag or a flat. If we're looking for a zigzag, then it would already be finished over here. Then this is your low, and you're looking for a move to the upside. However, this structure over here looks much better as a WXY double zigzag structure instead of an ABC simple zigzag structure. And a double zigzag is not allowed in a wave Y, which basically leaves us with the flat scenario, where we're then looking for this to be a wave A, as a WXY can be part of a wave A over here. Then we are looking for this target area for a wave B in an expanding flat, where the most common target area is the 1.236 to the 1.38, pulled from the high to the low of A, giving you a target between 38.8k and 39.1k, after which we then want to see a move towards the downside in a wave C, creating a wave A, wave B, and then a wave C to the downside, where we can take some lows as well. For example here, 35.5k, very interesting indeed, after which we then want to see continuation to the upside. It is important, however, that wave B is also a 3-wave structure, because a flat is a 3, 3, and then a 5-wave impulse. So wave B should be a 3-wave structure, most commonly a zigzag as well. If price just continues towards the upside and reaches this area in basically a straight line, of course the probabilities are going to be much higher for this move to be an impulsive structure and look for continuation, instead of a rejection in this area and then a move to the downside, where you go back below the low of this wave A over here. So what we want to see in a B is a rejection and then continuation, A, B, C, and then a move to the downside. Now if we zoom in to the lower time frames here, go to the 15-minute, then here you can see the WXY on my chart. So here we then have the W, which is your first zigzag in an ABC, followed by a flat in wave X, and then eventually we have another ABC to the downside in a wave Y, double zigzag WXY, finishing inside the most common target area for a wave Y, which is between the 1 and the 1.236, taken from the high to the low of W to the high of this wave X. Now then we are looking for a move towards the upside in an impulse in this particular scenario in a 1, 2, and then we're looking for a bigger wave 3 towards the upside. And a wave 3 can extend very, very much. It's always difficult to know exactly how high a wave 3 will go. What we have to look and wait for is for price to start creating a range. As you can see, as it stands, price is moving to the upside and volume is increasing. So we have to wait for a range to form, and only if a range forms can we predict the high of a potential 3. Then the range will likely be wave 4. Preferably the range is then the same size in time as your wave 2, and then you look for another push to the upside to eventually finish your wave 5, right? That's what we're looking for. In the bearish scenario, the volume over here in the high could be the high of a wave C. As price is moving to the upside and volume is increasing, you eventually want to see your wave 4 and then another high in a wave 5 where you make a higher high but a lower high on volume. If price moves to the downside and it retraces too deep, then the probabilities increase that this is an ABC structure instead. Now, what is too deep? If we take a Fibonacci and to take it from a safe spot from this low over here to the high that we have, and we toggle on the wave 4 targets, then you don't want to see price moving below this 0.5 and hitting this 0.618, which is sitting at 37.4K. Closing candles on top of the 05 is not a problem, wicking below, and that's all fine, but the 0.618 would be an invalidation for a wave 4. You don't want to see price retracing all the way down here. You want to see it continue, find support, and move towards the upside. Now, talking about support and resistance, price did pass the support resistance area over here, which was resistance, but eventually turned into support here locally. This was the resistance between 37.7K and 37.8K, was basically a piece of cake, even retested it over here and continued towards the upside. And now over here, price is rejecting at the order block that we have here on the 15-minute time frame. So if I select this order block and then drag this to the right side, you can see that currently we're finding resistance at that order block over here, creating a bit of a double top, as well as price retraced to the 886, which you can take from the high with Fibonacci to the low over here. Toggle on the 886, and then you can see the 886 has been hit. Now, it is very common for price to retrace to the golden pocket after hitting the 886. That is always something to keep in mind. So even closed 1 hour candles above the 886. But once the 886 is hit, it's very common for a price to move to the golden pocket, look for support, and then continue the way towards the upside to take the high over here, where we have this golden target zone, which is important resistance between 38.5 and 39K. And one of the most important levels there is the point of control of the range of 2021, so a yearly range, which is this point of control here, 38.7K. That is a very important level indeed, and just above that level we have the weekly naked point of control at 39K. So 2 very important levels to keep your eye on. Now, if we then go to the resistance over here, when I spoke about the bullish scenario and also the bearish scenario in the afternoon update at 1 p.m. when we were still ranging over here, we were talking about price moving to the upside and keeping an eye on this resistance at the golden pocket and the value area high over here, which was a little bit of an area of confluence. Now, I just want to show you what I was looking for at that moment in time, because as I always say, I like to keep an eye on the reaction and see what price does. So price was moving towards the upside. This is the previous high, and this is the area of the golden pocket and the value area high, right, that I just showed on my chart. And what you can see, first of all, is we are now ranging on top of the golden pocket over here, created some bullish CVD divergences here, higher low on price, lower low on yellow. Now, eventually we wicked the previous highs, bullish CVD plays out, bit of a move to the downside, but then what do we get once more? Bullish CVD. A higher low on price here, and on yellow we have a lower low on yellow, and also on blue, lower low on blue. So more bullish CVD divergences here, which increases probabilities for price to continue its way towards the upside, which is also eventually what happened, of course. So that is how I then observe the reaction locally. 3-minute CVD is one of my favorite CVDs to keep an eye on what the reaction is doing. Now, also here, CVD visualized, we had bullish CVD here, bullish CVDs between this low and the higher low, as well as this low and this higher low, followed by bullish CVDs here that I've just shown. And we also have bullish CVD between this low over here and the higher low that price has created, where the target is then this high over here. So a lot of absorption of market shorts going on by limit longs, pushing price towards the upside. If we then finally look at the probabilities of the different scenarios, then on the medium time frame, we are still looking for upside. We're still looking for a wave 5 to the upside, where we at least want to see this high being broken. On the low time frame, currently as it stands, as long as we don't see a solid three-wave structure, the probabilities are automatically higher for bullish continuation, where we're looking for an impulse towards the upside, and we simply have to remain patient and wait for a range to form, because it's very difficult to predict how high a wave 3 will go. You know, don't catch nice YOLO FOMO into trades, no financial advice, but I've learned my lessons in the past. What I do, you know, once I want to look for a short at least, is just wait for a range and get clarity. Once the range starts, we can get clarity again and count that range to, you know, assess the probabilities of up or downside. And currently on the micro, it's the same thing. As long as we see price moving to the upside, volume increasing, probabilities are higher for this to be a wave 3. We know the retracement level, right? If price is moving over here to about 37.3, 37.4K, that's not what we want to see, because in a bullish scenario, 1, 2, 3, 4, 5, wave 4 is not allowed to retrace all the way down there, and a wave 4 range should usually, at least by far most commonly, be longer than your wave 2 in time. So we at least expect a bit of a longer range in a wave 4 before then a 5 to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.